Yeah, because I pinched it together, and there's like a 50x and 100x's all the way down with liquidations. So it's going to be interesting to see.
Yeah, I mean, if you're looking at the overall liquidation structure that we've been doing in this high zone, you've still got quite a bit below you, and even much older liquidations going back to like 25, 26 and stuff like that. But because of the sharp move up, we had to kind of go sideways and then grind to be able to trap liquidity to the upside. So what I'm afraid that we'll do, and let me go to a different chart just so I can. I'm on the. What is this? This is the BitGet list. I took all of the futures tradable stuff and put it on a list just to trade it, or just to get a list of it. I think it is good. So even here, like you're seeing the rejection after grabbing a lot of high time frame or low time frame liquidity, like high leverage, excuse me. And that's essentially what you do in these kind of sideways ranges. And then you pop the liquidity, you fail below, and then you go lower. Because where's the biggest liquidity now? Essentially, well, if we fail here, we probably have to go lower because there's no big liquidity. I mean, we can go right here and then maybe bounce, but speaking mostly off of the liquidation levels, like what feels juicier is if we were to like go back to the upside, and then all of a sudden, all of this stuff is now accessible. And this is a lot of higher time frame. Heck, going all the way up to like 31.5 has now become an interesting level going into even 20x and 10x shorts. So the priority has changed slightly with this regain, if it's a regain. If we start failing that to go lower, like I would probably want us to do something deeper into like 28K, potentially into 27.9. And then once we do something like this, then I want to see like the bigger regain. And then it's like, okay, where's the structure? So even from here, we could just grind down and then we just go around flat and nasty. And then we pop the big stuff and then we go back to the upside, which is very possible. And it's very similar to what we did, a couple of months ago, where we just ground down for a while to go lower. But grabbing that liquidity there basically said, okay, that's the liquidity grab that matters. We want to gain stuff to go higher. And then where's the important stuff? So I guess going from like a higher time frame to a lower time frame, the big thing that kind of sticks out in my head, right, when I look at like the high time frame stuff is, well, where are we failing? Where are we gaining? What's the important structure? So yeah, this was important structure for testing. Yeah, the highs of it of that entire little range wasn't tested. And then going back to the left of like where that initial rejection was, basically where we failed at, failing the actual weekly structure of the bull run low, that could easily be the high, right? That could easily be the local high in the structure. And then, we grind down into something like similar to what we did. And then we have a secondary failure. And now the whole thing looks distributive, essentially. Because this structure here that we're doing now seems eerily familiar to what we did on the upside, but just an expanded version. Because, we made a gain, made a high, grind back down, strong retest of levels to go back up and start failing. So until realistically we start losing 25K or 24.8, you're technically still in an upside trend on the higher time frame, right? You had the move up back in January. You had the bullish back test, the flush out from like 22K, which was the long continuation. And that structure there, is essentially the mean stuff that people don't look at because you break things, but then you regain them, right? You regain the floor structure. You regained essentially that, right? To go then continuing. And that was the big reason why Will and I were saying it back in March, like, hey guys, this looks like the local bottom. We've grabbed all of the liquidity from everyone who was just longing from this breakout. And now we're moving back to an upside move. And then we got into the 2 months of very difficult, price action essentially. So where do we go from here? Well, like I said, the higher time frames is everything. So we're using some confluence tools to say, well, we've grabbed some bigger liquidity now. We've grabbed some local liquidity there, but are we gaining something back that we've lost? Well, yeah, technically we're back above some levels that we were failing, essentially. We want to see a hold here of structure. If we start failing back below that, it's like, why wouldn't you just go lower? To get the bigger, deeper liquidity that's much further down, like 28K. Heck, the major untested levels and structure going down to 28K exactly is much larger. So that's still the priority overall. and we've only grabbed liquidity here to essentially go lower. We're not gaining stuff back, closing back above 30K, right? That'd be or 29.9. That'd be a fundamental change in the price action, because now we're gaining back lost levels. That all we're doing here is essentially come down, we make a low, we bearishly retest the floor of the previous move, and then we're still failing down. And that's still the priority. Locally, we can see a little bit of a gain to go higher. So we'll go into a couple things that we can use to kind of help us out. Overall, like I talked about, I posted in the group yesterday, it's like, watch the bull div. Don't discount it. We had the close higher. I think it was 28.9 was when I posted it, I think. In the Discord, I basically said, if we close here or higher on the 4 hour, we're bull diving, and we're bull diving hard. And that's always a great sign. But then we have the leading things, right? We have for the flow index, right? If we're looking at it from a perspective of time frame of, okay, there, it's starting to break down a little bit. We make a new low, but the flow's going down even further. So now you're starting to think, well, if that's already breaking down and we're now flows increasing or decreasing for stable, and the same thing for what is it? The large caps, it shows you a bit of a change in the overall market. Whereas alts and shit coins are still getting punished overall. Even in this upside move, it was mostly felt in the large caps, right? Because they were still breaking up as everything else is breaking down. So that was like kind of like the first initial thing. So what we want to see here is essentially a hold that does, maybe a lower time frame move up. And then we could see some altcoins and shit coins potentially doing better overall. But from the higher time frames, and I'll go to I guess the index on that, so I can get the weekly in and turn that off. So even on the higher time frames, looking at the weekly time frame and whatnot, we're not doing anything super special. From the major failures at the highs to a major low down time frame where we finally gained above and started gaining structure to go higher. We're still essentially at a level where large caps have not improved essentially on flow or anything like that since around about 30K where we were back in April. So that needs to start changing. We need to start seeing some like higher time frame movement up, whereas even here, like we're still grinding down. And that's kind of like the big key here, is that we want to see the higher time frame gains going back above stuff. And then we start talking about 45, 46K. Because at the end of the day, what have we done in the overall structure? Right? We're still making higher highs and higher lows. Like the gain here on a weekly time frame, retesting bullishly the stuff at 20K, 20.9. This was essentially that's almost what you would look at as like a V bottom structure, where you farm out weeks of downside, months of downside, and then now that becomes the structure that you create structure above comparatively. So that's a higher time frame, like major gain over the overall level. So that's still in play as like the levels we don't want to get below, because it's very easy to say, well, this is the rejection from the higher time frame bull market, which it is, right? We see the supply failure, but it's good that we're testing it now. We want to test as high as we can until going into next year, until a potential bull run. The halvening, it's starting to get to the point, especially with the size of the market, that the halvening almost always denotes a bull run, but it doesn't have to. The thing is, the more we do to the upside now, the higher the likelihood is that we go much higher, because you got to think there's also still people that are trapped up here that are still white knuckling it, that are still afraid, right? So from a psychology perspective, you've had the low, you've had the capitulation with FTX and SAM and all that. You've had the major regain of structural levels at 20K, 20.5, that created basing structure that stepped us off. Now you're seeing a different tune, essentially, where TradFi markets look a little bit toppy locally, and you've seen 4 weeks in a row of essentially failure to gain above the floor structure of what we were doing in the bull run. So that's kind of like the problem that I see in the local structure. And then on the weekly as well, if we get down to 28K, I don't want to go below that. There's nothing left really to test until we go much, much lower, like 26K. But if we see a 28K move, that would essentially be the bigger, test to potentially go higher to grab that liquidity. Because most people will have to get shocked out of the market and stop looking for longs. But until then, you're essentially failing and going lower across the board. Even on like the monthly time frame, you're at a major level here, 29.2. Again, This is why that monthly SR is still in play. And even at 29.3, you've got monthly structure that says where we are in the overall price action. We still want to test higher. We still want to go to like 43. We want to go to 46 and test these things because it's good to test them. And if we do that now, the bull run will be much stronger to the upside. So that's kind of like my argument from like a high time frame perspective is like it doesn't look great and it doesn't look terrible because we're essentially at the high of this local range before we get back above into like the bull market range. And that's the big thing that kind of, people are not really paying attention to is that we are technically at a range high. If I can just find the fib, right? Right. If that's going to be your range high on the weekly, that's going to be your range essentially low if you want to take it from there. Now, I'd probably go a step further and say, on the weekly time frame, that's your range low and take it from close to close to make it more sound. And then to the upside, probably take it from about there to where we have now, right? Something like that. Heck, you can even do the same thing and it won't really change anything. So that's the way I look at the market from like a macro, like a high time frame, which is like we've lost the high range, we're in the low range. And if we start failing to go lower, like we're going to see some stupidity in untested, very low volume areas down here from like 11 to 15, where we probably see full market capitulation because we can't technically go lower than that. If we do, you could literally see the whole market roll over, which I don't think is a high probability. I think it's a very low probability of it. But in general, it's a sketchy ass area. So that's kind of like what I want to see as far as a gain to go back up and test stuff. Comparatively to what we've been doing now, which is we're in the range essentially of like the no fun range where we're at the highs. We've had some deviations of the higher time frame ranges. If we want to come back down to test stuff, we can, and that's what we're doing. But overall, we need to be essentially making a continuation move and gaining now versus going much, much lower. Because if we break that low at 25K, like the upside move is probably done. And even if we have a pop off after making that low, you're probably going to see a failure that goes much lower. So that's kind of like the way I'm looking at it from that perspective. But so how to use that essentially from like a high time frame to low time frame, I guess that's all that matters, right? So knowing where we are in the overall market, knowing how similar we are getting into like kind of like this grindy zone of, okay, we got a bull div, which is nice to potentially go low, to go higher. We've had some local gain of level. What can we use to essentially target stuff? So one thing that I've been looking at a lot more is like the MDVD on like 4-hour structure. Like again, why did we see the failure there? The majority of the volume, which was bearish, is in position, right? So just to kind of harp and double down on this, when you see bullish volume in position, bearish volume in position, those are nice examples of things that that you're looking for potential failures and continuations down in that level, especially when that is coinciding with other data. So now you've got things like the flow is breaking down for stable coins, it's breaking up for large caps. You've got a bullish div on the oscillator. You've got, essentially bullish volume in position as it's now gaining back above some local levels, closing very bullishly. And then on top of that, you can use other tools like my favorite, which is the, what am I thinking? This one, the retail stablecoin demand. So essentially what I look at that is kind of like the psychological perspective of the market. Anytime we start, even on the 4-hour, start getting under 30, you're looking for that kind of gain to go higher. Anytime we start getting really crazy, like around 75 or 80 on the upside, again, you're looking for failure because this essentially is what's showing market saturation. So when people are frothing at the mouth, right, they're just like, oh, I want to get on everything. We're breaking out of the structure. We're breaking. I mean, like that's pretty obvious that we're topping out, right? And then we have failure, and then we have continuation failure, and then everything else is also pointing that direction. We see some trend change a little bit later as we're going down the 4-hour, but 1, 2, 3, and then let me look at the MDVD in that zone, right? Overall, not super helpful, but again, you're failing back below the previous range, which is the entire thing. And that's essentially what we end up doing is that once we have these points of failure, then we look at, okay, what's next then? Well, we're still holding levels. We're still in position right now with some of the bullish volume. It looks a little bit rough on the current 4-hour for potential continuation. But all we really got to do is come back and bullishly backtest some stuff higher, and then we can potentially have a continuation move. The market saturation is neutral. Harmony oscillator is still going up. The trend is still technically up here locally or going up, but strength is starting to diminish. We've lost some strength from the failure back down. So from that, where's the major point? I mean, even the point of control is where it's at 29,250. That is the level that matters. So as long as we're bullishly above it, that looks like the level we want to hold for a bounce. And you get a good risk reward to come back up to retest stuff higher. So that's the way I look at the market from like a high time frame to low time frame kind of perspective. You could schwack on core to see what it's doing. Yeah, it entered along now that we flipped the level and we gained stuff back after holding the 4-hour low all the way from like 30.2. So again, it's a much higher time frame that we're looking at for, that type of stuff. And at the end of the day, I want to make sure that gain of level at all points is the function. The bands also is another great form of confluence. Even just turning off the actual long short settings, so you're actually looking for the reversals. Now you can use that in combination with everything else. Low on that, you've got low on the 4-hour, and you're testing the bands to go potentially higher. You break down on the bands, bullish div, you've got stablecoin breaking down, large caps breaking up, and you're now continuing back to the upside. So what do we do? We hold this, we go higher. If we fail down, where do we want to see a hold at? Anywhere at like 28.8, 28.9, and then a continuation. We don't want to see essentially failures that create new lows. If they create new lows, we continue the priority to the downside. And even here, right, even at this where we are now, stablecoin is pretty neutral. Stablecoin could get much, much, much more bullish if we want to see stuff like what we were doing back in the previous range, right? So in this area where we had that kind of nastiness of like we break down, go back up, fully test stuff, go back down again. Oh, this thing's still high. Okay, we can try to look for longs, test, failure, local structure, back down to new lows. And what do you see over here that's like kind of should give you a little bit of an idea of what's going on? Well, price is breaking down and stablecoin demand is actually bullishly deviating. That's a big thing that always sticks out in my mind. Like flow and everything, yeah, again, you're deviating on the overall structure. You're deviating down with stable coins, which is following essentially the downside of the market, but large caps are going essentially up with like the final deviation here, the regain of structure that then led to a higher move to going to the upside. So what we want to do with that is we want to look at like what's leading as far as like failure. Now, if you're in a macro upside move, like what we had back in June, right? A lot of people would have gotten out here, and that's a perfectly valid place to get out. Why? Because you're topping across the board on everything, right? Even though we did another leg up to another $500 leg up, but if you're looking at it from like a 4-hour perspective, like obviously you want to start taking profit in this zone just off of like that type of like macro structure. So when you do the high stuff, and now you're getting into like this range structure, the reason Will and I were so good at playing the range is like, well, yeah, you failed it, but as long as you're holding the low that you put in, you're holding 29.9, that's still the floor of what you're looking at. And as we squeeze, we have the deviation up, frothing at the mouth, failure, back to the downside. And that's what we're doing now. So we're seeing the first potential changes in that kind of downside that we've seen since last July, and it's happening right here. So what we want to do, essentially, you're looking for a hold of level to have a continuation move, start essentially targeting that liquidity to the upside. So that's an easy way, I guess, like a long way roundabout to explain stuff. And then looking at the higher time frame as well, it's always a nice idea, essentially, to make sure that you're looking at the important levels from a higher time frame, right? When you have levels like this that go super low on the daily, right? That's why we've got the on-chain alerts in the daily time frame to basically say, well, if we're failing that stuff to go lower, what else are we doing? Are we also bottoming out? We're getting like extremely high retail stablecoin demand, right? Even though we bearishly dived on the daily, did we break a lot of structure? Not really. We want confluence essentially that says where are the highs, where are the lows. Very clear low across most things, and then gain a level to go higher. Let me just get a question here. There was a invert the chart and check your bias, Rex. What do you mean invert the chart? I mean, it's not round bottoming quite yet. It's not quite there, sir. If you were to go to like 20, like go above 28K, 27K, I think I'd probably change my bias, which is we're still looking for a bounce to regain, but priority is still going that direction because that's where we've lost structure and levels. So I'd want to see a significant, essentially higher low, like coming up and testing this and then swinging back up to say, nope, rejecting 30K on a higher time frame, and then we're going lower. But what do you think? Tell me what you think. So again, from the high time perspective, another thing I like to look at is the just the on-chain rating in general. The on-chain rating takes all those things and kind of plugs them in mathematically to kind of say, well, where's a lot of like on-chain potential buying, like where we want to see like essentially the higher time frame accumulation of things versus higher time frame failure of things. Again, if you want to make this make more sense in your brain, because I'm kind of dumb, I just invert the chart and I say, okay, does that correspond with a lot of the other price action? Yeah. Are we still getting to a level where it's potentially good for a bounce? Yeah, potentially. I'd like to see a much further downside, like some much deeper corrective stuff going into like stuff we did back in here where we had on-chain raise like -3. Or +3. There you go. So that's essentially the way to look at the on-chain rating as well, is to say, well, if we have the on-chain stuff going much higher, it just means that it's a much more crucial thing to look at potential bottoms versus like when we get up in this area of like -3, that's starting to get now overall looking pretty rough at these highs, which is essentially where we had the local high. Then we had a nice buying zone that corresponded with massive changing in the overall flow index as well. And what are we doing now? A little bit higher time frame. It's a little bit sideways, a little uninteresting. I think a lot more pain is potentially valid if we're going to be, continue grinding to the downside. So that I don't think that overall priority has changed yet, if that makes sense. But let me open up to a couple questions as far as all that. Any questions so far about stuff I talked about or things you want to go in depth more on? Go more in depth on. Nope, all good.
I kind of
Yeah.
forgot all of these. Using a few of them, but the metric bundle. It's been a while since I checked it.
Yeah, same thing. I mean, a lot of times I'll get sucked into using a couple things on certain time frames, and I'll kind of forget to step back and have like a higher time frame kind of look at the overall structure and like the higher time frame ratings, and all of these things get output again into like the premium alerts area. So there's a place in there called daily on-chain rating, and that's an amazing thing to use for if you want to look at individual alerts, but for things like trend changes on higher time frames are in there as well. And then the on-chain ratings that pop every day, you'll see like a big update on the on-chain stuff. But even locally, using that, if I were to go to, let's say, retail stablecoin demand, and then go down to something like the 15-minute, you'll start seeing some of these things play out pretty nicely, where you'll see very large points where, okay, the retail stablecoin demand is very high. So that means everyone's kind of afraid and exiting. So even there, you can catch little moves. But when you actually see the deviations, right? I like to invert it because it keeps my brain thinking, okay, people are exiting the market. It's all in that perspective. So price is still going down, whereas the retail stablecoin demand is deviating up. So you've got some bullish deviation on very low time frames. And it's leading. Like, here's the thing about it. Like, it's leading to the point where, where you actually make the lows are usually, it's telling you it's okay, look for a potential reversal. Comparatively, when you get to the highs as well, you see very high retail stablecoin demand and then less so. Essentially, it's like where everyone's trying to exit versus where people are who are getting caught out as exit liquidity are, right? And in these zones, you've got that going like crazy. You've got this breaking down. You've got all of the stuff on the 15 minutes maxed out on Bitcoin, and even here and now you're starting to see some bullish retail stablecoin demand jump in. So even on the 15-minute. So if you're starting to see some potential reversal, you just want to see that confirmation of gain of a high time frame level. And then we should start saying, well, what are we seeing now? We're seeing, what is it? The large caps are starting to move up a little bit. Stable hasn't really broken down yet, and we are a little early looking for that move. So if we're going to see some kind of bullish hold, it'll be right here. Otherwise, it's a continuation down from the failure from above, if that makes sense. And I think with all those things, you see quite a bit of overall market moves. And, I like to use the on-chain metrics, and I'll just move it to, down here, and then slap everything to the right, move all the scales into one on the right. And then now it's like, okay, I have a pretty good idea. I can see retail stablecoin demand, some trading primary crypto. I'm seeing breakdown of structure. Like even here, we're starting to see some failures. Are we failing anything yet? No. How about here at the highs? You're seeing more yellow dots and trend change very, very much so. You're getting bearishly deviating retail stablecoin demand and everything else. You're seeing that the flow is already broken down significantly, and stablecoins are still rising. So essentially, you just look for that local failure, and now you're breaking fully back down. So even on low time frames, I think it's really effective. And then even using, the bands, I like the bands on a bit higher time frame, like the 1 hour, just because you can get caught out a bit. Personally, like the MDVD is still giving you like the main structure. It only has a certain look back, but even with that, you can still manage to see levels that are essentially out of position. Like here was a really interesting one, right? It would have been hard to trade it a little bit, but when you have very, bullish volume, very out of position, again, that's the key to using the MDVD in my mind. Is that even if you get stuff like, oh, it's a bullish position, like bullish volume and control, what about everything else? What's everything else saying? Well, are we holding at a major level? Potentially. Are we gaining anything back that we lost? No. And as long as you can get a 3-to-1, 4-to-1, 5-to-1 or higher, whatever your risk to reward ratio is, then it's a valid trade. But for me, all of this has to tie in together. So if I look at that's the 15-minute, what about the 1 hour, right? 1 hour still coming down. The one hour still got plenty of room if it wants to break down further. Stablecoin still moving strongly to the upside, even though, again, we had that big failure at the high. And then the 4 hours, well, it's still in that bull div potential. Stablecoins finally starting to cross with large caps coming down. So that's the big thing in my mind, is that if you're seeing the low time frame reversal, you have to, in my mind, have it coincide with the higher time frame structure. So that's the level to hold. If we don't hold it, we're continuing, and then we're looking for more pain. Like we've done the bullish deviation, we've grabbed quite a bit of liquidity from above us, right? We saw it. We saw that we grabbed all that 50x short liquidity that was right here. We've tested now the floor of the previous range, and we know that. So what's the higher time frame brain play? Well, it's the regain of that level. 29.7 to 29.9. Whatever high time frame you're looking at, we're still waiting for the 4 hour to do something bullish. The 4 hours coming down, the 1 hour is coming down. The 15 looks like it wants to hold this level, but we're not reversing yet. And since we're not reversing yet, there's no real trade unless you're trying to scalp it and be a degen, which not that it's a terrible thing. So even if I go down way down on like the 1 minute, all right, seeing some bullish deviation, but is it concise? Not quite. Even on like something like this, you want to see a gain of something to go higher. You want to gain back a swing, gain back 29.3 and then go to 29.350. These low time frames. But that's the way, I look at it from a high time frame to low time frame, is that I'm okay with taking low time frame trades, but I know that they're really short, that they're only going to be in for a certain amount of time. And even though we're getting to the point where, okay, we might be starting to look for a reversal, is there any reversal shown? Is there any reversal on chart? No. We're failing everything. Even on the 15-minute, we're failing the August. We want to see the gains of stuff to go higher. We want to see reversal indications to go higher, if that makes sense. So any questions on that? And that's the way I look at it from like a high time frame, a low time frame. Same way as I look at alts. At the end of the day, if you're looking at the alts, I want the flow index to be working as well as looking for structural gain loss of level. And you always, if I'm trying to scalp an alt, I want to make sure that I'm going in the direction of the 1 hour, the 4 hour. Like they're not going against me, because I don't care if I catch the bottom. If I'm catching the bottom, I'm gambling, and I know that, right? And that's the big thing that most traders don't have. It's like, it took a lot of pain and stuff to learn it, but if we're gonna hold, it's gonna be right here, and that's the whole thing. And I think from a psychological perspective as well, is everyone wants to catch the bottom and like pull the gun early instead of waiting for the regain of something. Like this is fine. We made a higher low on structure at 29,271. We're starting to turn back up on the flow index, and we want to see a bounce here. Can you take that trade? Sure, with a really tight stop. You're targeting, 29.3, essentially like $20 above you. But is it worth it with everything going against you still? No, I don't think so. What's an easier level to gain above? Like 29,350. You gain that back. You're getting some momentum. You're seeing the 1 hour, 4 hours starting to run flat and sideways potentially. Until then, you're still like, that's all that really matters, essentially. Is making sure that we're seeing a potential slowdown. We're not there yet. I want to make sure the 4 hours in my on my side, essentially, because the current daily looks just absolutely wrecked, right? And I'd be much more confident if we did a nasty grind down into some of this structure here, which would probably take us all the way down to like 27.2, potentially 28K at least as well, if that makes sense. And at the end of the day, it's all about the liquidity, right? Is there liquidity above us? Yeah. There's liquidity above us and liquidity below us. I would say the best thing to use the liquidity on is the 4 hour. And if you're trying to actually catch reversals, you have to make sure you hit stuff. You have to grab liquidity and reject it. It has to be essentially the fill of that people getting stopped out. All of the 50Xs or the majority of 50Xs from the last week of price action getting stopped out to fill larger shorts potentially for more downside. Or even in this zone, I mean, you're talking about a $500 move down we're almost $1,000 move down, right? From where it stopped at 30K down to 29.2, so $800. That's the way to look at the market. If you're trying to catch like the early stuff, you look at the big pockets of liquidation that builds. And I think I posted that in the. Did I post? Yeah, I posted that in the chart. Let me just see. So I posted this in the Bitcoin chat, essentially, or in the forum, right? I talked about the high leverage, the rejection there. I posted it on Monday, right? The high leverage rejection is what takes you back to the middle, and it did. If we do the gain, we go higher. The range low must be gained or downside will continue. That's pretty self-evident. We've grabbed the high leverage long liquidations below us to go back to the upside. So what are we doing now? There's higher stuff above us, but we need to gain it to go higher. If we want to continue moving down, we need to fail here locally and then go back down to take some of the bigger stuff. But I think that makes sense. Let me just check. Any questions on that overall? I know it's a lot. Sorry if I went too fast. I can go back through stuff if you need me to.
All right, solid as always.
Well, I mean, it's the end of the day. It's got to work, and if the strategy if it's not repeatable and consistent, then you're gambling, and that's what we kind of look for is the confluence of all the different things kind of adding together, and the fact that we grab the liquidity, we're back at center. I mean, that's essentially all we look at when we look at the markets nowadays. It's you have to gain or lose a level as a requirement because what are we? We're price action traders. So the fact that we have liquidations as such a powerful tool just helps us overall. But yeah, that's how I look at the market. That's how to kind of build the confluence from high to low, essentially making sure that whatever you're trading on, if I'm going and looking at, let me just look at my regular list. Right. If I'm looking at like Litecoin as an example, or actually, let me look at render. I haven't looked at liquidations on this in a while. Pocket liquidity grabbed, move the upside, fail. I'd argue that 1.8, that test there was a grab on the liquidity. If we're going to go higher, right? Where's the big alt liquidity? Is the big alt liquidity above us or below us? I mean, obviously, if we start gaining stuff, we want to see some bigger grabs of this chunky liquidity here. Otherwise, historically, what have we done? Like if I put on, say, the bands as an example to see like how we move on something like this. After usually a big move, something down that grabs something like the very low long liquidity, what do we see then? You see essentially a deviation where we grab less liquidity, but we go do a move down, and then we come up and do the opposite. So we're basically going here from 5x to 5x, and like the deeper tags of like the 3x's and stuff. That's usually the bottom, or at least the important bottom before we do on the bands, essentially a higher low. And what have we been doing now? Then we squeeze, we're grinding down, we're grabbing quite a bit of downside liquidity. For this thing to go much lower, what would probably be a good target? Something like 1.5. Does that play into any major levels, like looking structurally? I mean, that's taking you right back down to like the highs you put in back in March. If we're going to go deep. But where's the majority of liquidity? It's above us. And that's across the board. And that's always what you want to see with alts. You want to see them like trap liquidity, pop it, trap bigger amounts of liquidity, and then pop that. So, and even overall, like in this whole move, like you've got larger liquidity going right back to some of these highs these alts have made. Let me think, like things like near, you know, they've had such exacerbated moves where all of these things, when they did their final flush out, they almost always go to the 3x, and then you're looking for essentially the gain that takes you back up. And same thing to the upside. Like we've built in so much downside liquidity by just failing and failing and failing over and over again. Because when we finally capitulate and have the big moves up, I mean, you're stopping every single short out. Every single short is getting stopped out, and then finally you have a failure lower high, failure back below, and now you're starting to fail structure after making lower highs, failing the bands, and you're in this kind of downside grindy structure. But the liquidity that's still in play on some of these things is wild. Like Near's a perfect example. Like if you start gaining stuff, like gaining June, I mean, you're opening up all of the liquidity you built in from April through June, essentially, right? This whole big downside where we just went lower high, lower low, lower high, lower low, all the way down. So if we want to go much lower, where do we have to go? We probably want to see a bigger, deeper drive down towards like the yearly open, or potentially below it, and then a higher low off that. But that's how I use like the bands, and I use the liquidations as far as like finding levels, because it works on everything crypto. Essentially, you're looking for those essential reversal points that coincide. We're hitting the 10x or the 5x shorts are getting taken out, right? A big pocket of them, and then we're seeing a failure back below June, right? Test, bearish retest, lower. We're grabbing liquidity. We still pockets above us that are being built. What about here? Is there some deeper liquidity if we go all the way back down to the yearly open? Sure, but where's the bigger local liquidity on this? Most alts have bigger local liquidity right above us. And when you go into the stuff like the daily, you'll get some the lines will be quite more dispersed because you're looking at much more higher time frame. I'd recommend if you're looking at it from like a liquidity and you want to have more look back, then you look at it from like the 12-hour. So you'd be able to see a bit more of like the chunky liquidity that's essentially around us. And what do you see? You see like, yeah, there's some bigger liquidity down here. If we start breaking here to go lower, we're targeting the yearly open, and we want to see the yearly open, maybe just a little wick out of the yearly, to then start grabbing all of that liquidity back up to like, mid-July at the very least, and potentially much higher. So it'll just give you a bit more of a perspective of like where the big stuff is. I think the 4 hours is the key to using this thing, because very often you'll see the same thing that I do, which is we'll grab some higher time frame pockets of liquidity, and then when we see a reversal, that's the reversal. And then we look at, okay, where's the bigger chunks, that type of stuff. But at the end of the day, for me, I only trade alts that are working with Bitcoin, like going in that same direction, because I can then maximize the percentage gains up or down. And if Bitcoin is not doing that, if Bitcoin is not, gaining and moving higher, it's just grabbing liquidity and failing, then I denote and say, well, what do I want to gain now? So I have an alert at 29.7. So we gain 29.7. I want to start grabbing the bigger liquidity above us. And that's also the local restriction that pushes back down to the May level, where essentially we're holding and bullshit back testing on the 4 hour, like about as to the dot as you can possibly get for potential bounce. And where's the liquidity now? Well, the liquidity is above us. Like the lower time frame liquidity has been above us for a while. And that's still valid in play. If we start like critically collapsing here, where are we going? Like, we're going to wick into 28K before we bounce and potentially do a higher low. We're going to 27K. We have bigger, deeper structure. Where's the bottom in this whole thing? Probably something nasty like 26K. That's like if we break all of this. And that's a big if. Because even here to the downside, right? We absorbed all of that liquidity to the long liquidity, and we didn't go back above, right? Whereas here we absorbed it and moved back down. Here we absorbed all of it and then bounce. Trapped more, bounced. Did we really gain a lot back? We've gained something back, but not everything. So you gain the daily, where's the local liquidity? It's above you. And that's should be reminiscent of everything else, right? That should be that maxing out, stablecoin turning around. Stablecoin still looks like it's in control and strong. And that's how I use everything kind of combined together to kind of target like what levels I want to essentially see tested. On top of that, it's price action. Like at the end of the day, that's why we go through that so much in the fireside, which is like, if you're not gaining or losing stuff and you're not testing things, then can you really have a repeatable thing? Like, and a lot of people get stuck trading alts. I still don't think like trading low cap alts or like stuff that isn't in the top 30 or 40 is usually good for people, because they can move very, very differently from everything else. And that's a problem. At the end of the day, I want things that trade with kind of the trend of everything, trade with the rest of the market. And I'm just using alts to expose myself to a higher volatility gain of P&L. But yeah, that's about it. Any questions overall? Kind of just going through some indicator use, high to low time frame confluence, try to look like, everyone wants to catch that reversal, right? It's all relative. Yeah. Again. Yeah. Oh, you've had some continuation down. It's a very double bottoms for me are things that take weeks and months or years to kind of play out. It's like trend lines. Like I don't use trend lines. I know Will does a lot more than I do. But overall, the trend lines are very specific to me. That it's like I want to see high time frame trend lines fail, and then it has to correspond with everything else. Like it has to gain something. Like here on Litecoin, like we've broken down even on the 15-minute. You've made new lows. You've got essentially moving away. You've retested like May levels right now. What's a potential long that would probably stick out? Well, how about regain the level that you lost that led you to the low? Regain the level that you lost that led you to the low. Like that, when everything else is starting to turn around and the 1 hour and the 4 hour doesn't look like ass. That looks more attractive to me than trying to catch the bounce. Because then you're trading with a trend, right? When the trend changes and you've got confirmation that the trend's going in your direction, yeah, you're trading with the trend. So as it's pulling back, right? If it starts going like this, I can then long the regain. I can long the regain of the regain. I can long the retest. Maybe I get stopped out once and it comes back for a deeper one before going, and then you have the higher. Like the whole point is that you're going with the trend instead of everyone does this and it takes a long time to kind of like beat it out of people. Which is if the trend's going up, my first thought isn't, well, what if it stops here and then reverses? It's like, what if, right? But if you have trend change, you have confirmation of trend change. So like you're making lower highs and lower lows, and then all of a sudden you gain back something you lost, maybe do something like this, and then you do a higher low like that, you've broken, made a new high. Like obviously much more confluent to now take a trade in that position because you've gained and gone higher. You've gained from the low. You've regained the level that you lost that led you to the low. And that's essentially how the market's reacting. It's like you're going from liquidity to liquidity. You're testing things to see if there's still buyers or sellers, whether you're going up or down. And then you're essentially adjusting from that, which is what can we use to kind of improve our odds, which is, well, if we're gaining stuff and this thing is bottomed and flows reversing and stable coins maxed out green, then you're probably saying like, okay, then we're actually looking like we're reversing and going the other direction. Until that happens, where are we going? We're going down, right? So you're still looking for that failure until you see the gain. Like, and it bugs people, and I know that, but it's the non-sexy way of trading, because the sexy way of trading is I'm going to catch the bottom and the top instead of like, well, I'm just going to, the trend has changed. I'm going to trade the trend until it trades again or it changes. So that's the entire game plan in a nutshell, is that my expectation is that a trend will continue forever, whether up or down, until I have proof that it is changing. And when does it change? Subsequent higher high, higher low, or subsequent lower low and lower high, like in whatever order. Because all you're doing here is saying loss of level, new lows created, downside continuation until proven otherwise. We're looking a little bottomed. We're looking a little bottomed locally. Yeah, we're doing a little bit higher low. If you want to be like really low time frame on this stuff, right? We have the big low here. We're starting to trend change a little bit. Stablecoin's still going up because we're dumping, but overall, like all we need is a bit of reversal, like essentially right where we are now to eventually go up, and then we can start talking about gaining stuff. But like I said, the anything, even the 15-minute, is not like a winning man's game until you're ready to really start market smashing in and out, and that's not. And you have to use high leverage, which I don't recommend until you're confident. Like stay on the 4 hour. I mean, that's always the better one. Yeah. But I mean, that's the priority of the structure. I mean, you made a failure. The 4 hour I talked about on the stream, you're failing. It's going down. It's even here, it was kind of middling, and then now it's breaking back down again. You're making lows. You're at essentially the level to hold. But what do you want to see as a regain? Like if I invert the chart, does it make sense that we're going to go, essentially back to the upside? Like not yet, right? We're failing a little bit. We're failing to make new lows from that level. But don't we need confirmation? Don't you want to see essentially the local level gain back? Yeah, and I guess crypto Twitter is like a decent thing as well. Is that, I mean, if everyone's screaming about short it, go lower, well, take an opposing view. What do we need to gain back to go higher? April Q2, $90. Yeah, I mean that's the whole thing, right? I mean, you have to realize that everything is based off of the majority losing. So everyone's saying, "Oh, Hex is going to $1," or "This is going to this," and everyone's screaming at the top of their lungs that this is happening. I'm probably looking at the opposite that's happening, because that's the way the markets work. 80% of people have to lose money. And if that doesn't happen, then the markets are, you wouldn't be able to trade them. If the majority was winning in the markets would essentially fail. Like in financial markets, the majority has to lose and lose consistently. And almost always in retail, that's the 80-20 rule. 80% losing money, 20% capitalizing on their mistakes, essentially. Or just trade Bitcoin and ETH. That's like the simpler one. ETH has got a bigger slide up if you start gaining like 1873 though. Like if you gain that back, I mean you're probably looking for something dumb. If ETH could squeeze, but there's no real evidence of it yet. You could be putting the higher low in here, at least for a local bounce back up. But the main trend is still down. Like I want to see like that held, like literally where we are now, and that's just local swing structure. Anything else? Any other questions? I mean, yeah. I mean, that's the thing. It's like it's the priority is still down until proven otherwise. I mean, alts. I think still alts are going to have a reckoning. There's still way too much alts going around. There's still way too many things that are redundant or have no use case or memes or there's a better solution for what that coin did or does. Which one? Let me look at the index real quick. Yeah, or a double top. And that's what I would consider double top. You've got a multi-month separation. Maybe a big bear div if it starts reversing here, starts losing it. Yeah. But again, like the thing that I don't like about some of these smaller cap coins is when they're doing this essentially, like Bitcoin and everything else kind of looks ass on the current day. And stuff like this, just doing the exact opposite, gaining, retesting bullishly, and then continuing. Like, yeah, the trend's up very much so until proven otherwise. That being said, even on,
It's a strong narrative.
yeah, I mean, it's gaining to go higher. The trend is up still until you see reversal. If you see loss, like a very clear loss initially would be that would lose the floor, the daily. Yeah, it could be, but again, it's like look at the high structure. Like you're talking about stuff you did back in April when you made the current all time high or like the index high on it by the looks of it. So from there, looking at the overall market structure, where do you expect it to go eventually? Like if it starts reversing hard, like where would this thing go? Um, and my argument would probably be if I just you know it's already done that. It's already done that test. It's done that test. 0.15. Dude, take some profit here, dude. And volatility's back up. The VIX is back up. We'll see if it actually breaks out in some stuff. The one thing I am, what's up?
DXY is pumping a bit as well.
Yeah, I mean, Dixie's still going, man. I mean, if we want to see some failure, it needs to happen like pretty quickly. I mean, like here would be a better failure, a weaker failure, but 103, 1029. TradFi is getting brutalized right now. Like bear div, like again, higher time frame is everything that matters. Like you have a daily bear div here, and you're potentially breaking the low structure. S&P, you've actually broken the low structure and it bear divs at the same time, and then all of these little moves have been deviations on like the daily time frame. So it's all breaking right now, but can it reverse still? Can it still hold the high time frame upside trend? Sure. Until it loses that, then it's lost the upside range on a daily time frame, and then it's pretty much done until it regains 4.5k.
Is it expecting a hike? Is it priced in, or
I mean,
because we got unemployment the 4th in 2 days?
Yeah, so
And
the unemployment stuff is expected at 3.6, I think. Yeah, so we'll see if that really has a big role. I think you'll see some volatility from that, but I don't know. At the end of the day, TradFi is way, way overdue for like a very significant retracement. Maybe. I haven't heard anything.
So that was
What's that?
yesterday.
Oh,
So they got downgraded from AA plus to AAA, which is why a lot of the indexes are tanking today.
I mean, it just seems coordinated.
yeah, we're such a huge industry with a big market cap.
Yeah, I mean, like even the market cap. I mean, the problem is you got to put it in perspective. Like, what the gold's what $12 trillion or something as a market cap. I believe, I don't remember, but something like that. And then you look at like the total, and we're like a 12th of that, a 10th of it. So from that perspective, I mean, it's kind of deviating.
The JOLTS data was yesterday, right? Or
yeah, the JOLTS data.
Yeah. So I just heard listened to some space yesterday. And I'm trying to see the hiking for September.
What hike are you trying to see?
Nah, but they were talking about like with a pivot, or seems to be like there's depending on the unemployment data in 2 days. That if that comes in strong again, they probably have to hike. Yeah.
Yeah, I mean, I don't know. What do you think, Rex, about that?
On the macro.
I mean, I've been saying it for quite some time, right? That the aim of the Fed for raising interest rates is to cause the employment issue to increase, in the sense that they want people to lose their jobs because it lowers spending and all that kind of stuff. So the fact that they're seeing a lot of jobs being added into the market now, that again could be seen as like seasonal because it's summer in the US and a lot of stuff happens during the summer, and it could just be a seasonal thing. Not just tourism, it's just like a lot of fun, like summer fairs and carnivals and all this kind of stuff that is basically just temporary employment. And then kids go and get summer jobs, and university kids and all that go and get summer jobs and all that kind of stuff. So That could. Yep. Yep. Because the companies have to report the number of payrolls that they're issuing. So yeah. I mean, we saw the same increase in winter last year, where suddenly jobs just started picking up, and that's when they started doing their very aggressive rate hikes and all that kind of stuff. But we've reached a really big point in the Fed at this point in time, because we've got rates that are really, really high. And now, just earlier today, I heard that they were looking into buying back bonds or US bonds or something like that. So that already like red flag, because if they start going towards the Japanese route, which is really, really bad, because basically a public company in Japan owns like something like 60 or 70% of JGB bonds. So basically the government is buying their own debt, which is a really bad thing. So yeah.
Yeah, they're at like 220% or something like that
Was that?
of their GDP. Debt to GDP ratio is like 220% or something like that.
Yeah, but that's also why if you look at uh if you look at the Nikkei, the Nikkei has been having a really, really good run recently. So that's another thing to take into consideration, because if the public cannot make money from all of the normal instruments, such as such as bonds and keeping your money in the bank and all that kind of stuff, they just end up buying stocks. So it's either stocks or property, because there's no other option. So, but in terms of like the actual rate hikes, for the US, I would want to say that we have sort of reached a plateau, but that's me. That's not Powell. So yeah.
I mean, I remember they had watched like looking through their notes to see charts and stuff of like what their potential increase was. The big thing there was, there were some outliers that targeted 6% as a possibility, but I don't see how that's a feasible thing now with them overall.
Um, yeah. I mean, the more they go closer to, as it is, they're already at a crazy rate at the moment, which is I think 5.5. So if they start going another 50 basis points like this year itself, it's gonna be crazy. A lot of people, as it is, the homeless situation in the US is really, really bad, and these are big, major populated cities. And if it starts going to 6.5%, you can basically say the whole like the US property market is in like a huge
Free fall.
recession. Yeah, it's just gonna dive down as fast as possible. So yeah.
Well, the scary thing there too is if the dollar currency index is also dumping.
Yeah,
That's
exactly.
yeah. So that's not something I've really mentioned before, but I'm sure you've talked a lot about that as well, Rex. But if the traditional finance markets, where there's a general inverse correlation between the dollar currency index movements and indexes and the general upside moves of the Dow, the S&P, the NQ, everything, if they both plummeting to the downside, like you're talking 1930s level of shit hitting the fan in the US.
Yeah,
And
and
like,
I mean it's not like, if that does eventually happen, then I do feel that there is a case for Bitcoin to go back to 15K, because you have to remember that these guys are going to be strapped for cash at that point in time, because everything's just going to go crazy, right? So
yeah. The only potential positive with that is, if Bitcoin then were to create some type of basis, and I've shown you guys this chart before when we've obviously looked at the WM2NS, right, on higher time frames, showing that now we're seeing some stability where they're still technically going down, but they're not going, straight down essentially. Or at the month, there we go, the monthly. So we're seeing a little bit upside on the higher time frame on like the monthly now, because they changed when they report this stuff. A lot of nefarious, weird changes to like stats reporting for stuff like this happened during COVID. But with this going up, and then you're looking at things like the Dow, right, at that high time frame of where we're going in the value of the money and the value of the currency, is like there's a real potential for a rollover if you get below something like essentially 14K, like that, and that's a real possibility. These are technically untested levels on the Dow, and even then, if we're going to do like the overall value of the true valuation against the amount of money stock that's in the actual market, you're still essentially seeing no real gains in the last 23 years, with the dot-com bubble in the 90s being like the high point of economic, growth to dollar, essentially. And if this thing just rolls over, like you're going to see this thing go down to like this structure, like down below the 08 recession levels very easily, I think.
I mean, if you just go back one chart on the Dow itself, if you look at that whole pump from the COVID dump to 2021 bull run high, we've said this many times that was just basically money printing. So that dump actually should have been a lot more serious. We should have actually come back down to at least the pre-08 recession high to test those levels, or maybe dip even lower if that was like a natural sort of dump or sort of recession. But obviously they stopped it and they just kicked it down the line by printing money. So
we'll see.
Now they're at like a huge impasse right now. It's either, so they need money as well at the same time, but they also don't want to print more money because it's just going to destroy the economy. So yeah.
And they can't cut spending because they don't know how to do that.
Yeah, I mean, the only place that they can cut is actually on defense and military, but they're never going to do that. So yeah.
No. But I'd agree with that. I mean, I've heard some guys making the joke about like the untested stuff going all the way back to like 4K. But
yeah, I mean,
if you want to be critical of it,
possible, yeah. But if that does happen, like if it happens in like a really really short time frame, you can see a lot of blood on the streets.
Like literally blood on the streets, like people, like zombie apocalypse style.
Yeah.
But I mean, that's what it was during the recession.
The only person that's like safe right now is probably Viking because he's in the woods.
Yeah. Yeah, but look at what 89% down would be.
Yeah.
Literally testing that.
Mm-hmm.
And that's the equivalent, essentially.
Yeah, but I guess you see how that took like 4 years or something like that to reach that. So I mean, if it does happen over 4 years, at least we'll see signs. And now that people are more advanced in trading and all that kind of stuff, people can make money on the way down and all that kind of stuff. So
yeah, and then just convert that into Bitcoin.
Yeah, exactly.
Because whatever happens, like, and that's the thing, I don't think this has to happen. Like, I don't think we need to have some kind of like, I know I'm dooming and glooming right now because of how stupid the entire market cycle is right now, but it doesn't have to happen. Like this nonsense could continue without a doubt. If it's done right, if there's a couple of good market factors that would come into play, and at the end of the day, it's not impossible for us to essentially say, well, we could actually have a move that continues to go to the upside, but eventually this whole thing has to come to an end. Like, it's not a viable system. That's not even right. 89.44.
I mean,
You know?
we're getting closer to it with the whole BRICS narrative and probably a collapse of the US dollar. But how long does it take? That's the question.
I mean, at the end of the day, your best bet's probably to buy gold.
Yeah. Yeah. I don't know. In Asia, it's always been a known fact that if you have spare cash, you just buy gold, right? So, like, people here buy physical gold. They don't even buy like the stocks of gold. You just store it. So yeah, it's I kind of like really hate talking about it in like this whole economic situation at this current point in time because a lot of it is very doom and gloom. So yeah.
That's what I like to hear. Bring it on, Rex.
Yeah. Well, I mean, at the end of the day, it's like if the global currencies are collapsing, people are going to look towards something else, and as long as the lights are on, Bitcoin's still viable.
Yeah. I mean, yeah.
So you're telling me, Rex, the world is going to end, and
No, I just think there's going to be a huge shift in like at the moment the Americas are seen as like the major economic driving force of the world and all that kind of stuff. Like I'm pretty sure everybody's heard the statement of like America sneezes and the world catches a cold.
yeah.
Yeah, so that's sort of shifting. It's no longer like America sneezes and the world catches a cold. In COVID, we realized in COVID we realized that when China is closed, the world is basically dead. So that's something that America is starting to realize, and that's why they're trying to push for a lot of companies to open factories and produce goods in the US because they don't want to be reliant on external imports and economies and all that kind of stuff. So then,
It takes a while for that to get online as well. So
yeah, I mean, like, it's really hard. Like at first, everybody thought like the EU might be able to do it, but that didn't really be a successful thing.
we're fucked.
So
We're fucked, man.
yeah, yeah, I don't
Oh.
know. Like it just became like, oh, everybody's riding on like one or two ponies or something like that, and those guys are like slowly dying as well. So yeah. So I don't know. Like there's definitely bound to be a shift. There's a lot of talk for BRICS, like was mentioned earlier, but to get BRICS to agree is also like another thing, right? So, yeah.
I just heard
Yeah.
India as well declined to. I mean, yeah.
I
So
mean,
yeah.
like the biggest issue is RNC in the BRICS, right? The C is never the C guys are never like transparent or anything like that, and the R guys are just always looking for at this point in time, always looking to acquire land and all that kind of stuff. So
And China, with their demographic, seems to be in some big trouble, and India is up and coming. So what I heard is that India refused to do cooperate. Let's say a currency for the whole. They declined that.
yeah, because India has really huge ties with America, right? So America is probably like threatening them. You guys can't do this, otherwise, we're gonna come and take action against you. So yeah.
They could sneak it by now because there's probably gonna be some trouble in Africa.
Yeah.
Well,
Yeah.
it continued. I mean, there's like like all of the big countries just south of the Saharan, or even in the Sahara, they're all kind of looking pretty shady right now with the coup in Niger. And
I mean, I'll say this, right? If you look at the coast of Africa, okay, and you just look at the last 5 years at the amount of investment that was made in the coast of Africa by China, if you look at all the ports literally developed by Chinese companies, and what happens when the African nations can't pay back? You think China's just going to be like, oh, it's okay, it was just a gift? No, they're going to come and hunt them down. They're going to seize control of the ports. And what happens? They just control the whole African coastline. So I don't know. You guys draw your own conclusions from that. So yeah.
that's a terrifying thought.
Yep. It is. But that's the thing, right? China's playing the long game. They
But
know.
do we really think China is worse than the States? Or
Yeah. Well,
Yes.
I mean, yeah, like
So China is literally the reason why a lot of people do not want a CBDC, because in China that is like a live case study. If you're it's so crazy there that if you're even sitting in a coffee shop with someone who has low social credit rating score, your social credit rating score drops.
yeah,
And you
so
may not even know the guy has low social credit rating score. You may not be sitting at the same table, but because he is there and you are there, you are affected by that.
I've seen some stuff on that on Twitter with like billboards with shaming people with low social credit score, and
Yeah.
you've probably seen the one with speeding. You're being
Yeah.
surveillance, and if you speed, it automatically draws from your credit, lowers your social
Yeah.
credit score, and it's automatically
I mean,
pulled.
yeah, it's they just like deduct money from your bank because they're
Yeah,
like, oh, you were speeding and we sent you the fine. We sent you a letter saying that we have deducted money from your bank. And what are you gonna do? You can't like go up
yeah.
to them and tell them, yo, I wasn't speeding or something like that. You know, you're gonna go to court and everything. Cost you more money. So yeah. China is literally a surveillance state. So
plus there's a pretty big argument I've read about. The next couple of years they have to make their move because they're also sitting on a population collapse. Um,
but yeah,
yeah, so Russia and China, they also know this because they're not dumb. Like the people in charge, they know if you look at the population graphs, if you want to see an expanding population, it looks like a pyramid. If you want to see like a stable population, it looks like a big column where essentially you have like the different generations of like newborns, and it's the same amount year on year going up. And if it's growing, of course, like there's more newborns than there are from the previous generations and above. Now, with China, because they don't allow any immigration, they don't have a higher birth rate because they're still not really incentivizing birth rates. They're sitting at the point of like a significant population collapse. So essentially, they have an inverted pyramid, which is their population, into which all of the elderly will then exist as a burden on their society. So like their two essential options in the next 10, 15 years are, watch their entire economy shift from, a growing, expanding technological advancement, land, natural resource advancement to supporting the elderly, or they start a war. So they know that they either collapse over time, which they're not going to let happen. They're either going to start larger conflicts and wars, or they're just going to genocide everyone over a certain age. And those war and genocide of their own people is much more likely in my mind than them just like, oh, saying screw it, we'll just chill.
yeah. I mean, we have like live case study of what happens when you don't pay attention to that, which is basically Japan, right? Japan's full of an aging population, and they're literally trying to attract like uh they're literally trying to attract people to come and like increase their population. So they're giving people visas to come and increase their population, if you get what I mean. So yeah. So China literally knows what's going to happen because it's happened to their neighbor. So
Yeah,
we're just going to have to wait and see what happens because they're going to have to make a move soon, in my opinion, if they really want to take over.
Yeah, we'll see. I mean, at the end of the day, I mean, it was so fun. I got to, like 2 weeks ago, we started organizing like a blockchain or Bitcoin meetup around where I live. So we actually went to an ice cream store and we were able to pay with Lightning there. And it was faster than the guy next to me using his card. So
do you manage to convince the store owner to get it? Or?
no, he's a maxi.
Okay,
So,
okay, yeah.
yeah, like, and it's weird because like I was never a maxi until like the last couple of months. I started like really, I think more fully understanding the capabilities of it and the math behind it. So at the end of the day, I think it is a very easy workable solution as a potential, you know,
I
change in the economy, and it's something that's
close second.
close second to XRP, and XRP is a close second to Pepe. So
I onboarded my neighbor to get because I'm buying eggs from her weekly. It was like, yeah. So I would really like to. Nah, you don't have that. I would, but I insist. I would really like to pay in Bitcoin. Oh yeah, I guess all right. So I helped her download the Phoenix wallet. So now I send her satoshis every time I go there to get eggs. She's like, yeah, don't worry, I'll help you in a couple of years to to sort it out. It's gonna be interesting little experiment.
yeah, I mean, I started getting into like Noster and Alby and all that, being able to set up Lightning payments and everything. I think that's a pretty cool potential, solution across the board. But oh no, I'm keeping my firewood. It has to store it. I have to store it for like another year. I just cut down like 5 trees earlier in the summer that were looking a little rough, and no, and even then I'll wait till the wintertime to sell them anyways, because then the price will go up because electricity will go up, so people will burn wood instead. Economics.
Yeah, it's gonna be interesting to see now what happens in Nigeria as well if they don't want to ship the uranium to France. France might be an even more problem the coming winter, not only Germany.
Yeah, France has a lot of problems. Like,
I mean, I'm going to say something which is a really unpopular opinion. I may shoot myself in the head here, but Putin knew exactly what he was doing when he went to war with Ukraine.
oh, absolutely. I don't doubt that for a second. It wasn't
He
off of
he
whim or
knew,
anything.
yeah, he knew that basically controls like 80% of Europe with just like oil and gas. So
It's the same one now. He's been pardoning debts to African nations, and yeah, fuck it. This supporter, I will ship the grain to Africa.
yeah.
He's buttering them up.
Yeah, but you think about it, right? What did I just say earlier? Who
Yeah,
controls the coast of Africa? China.
yeah.
So he's basically shipping to China, but not in China. So China cannot be accused that they're dealing with Russia as well. So it's a huge conspiracy theory. Get out your tinfoil hats, boys,
No, no, no. I
boys
mean,
and girls.
there's a red line there,
Yeah,
or while we're talking about conspiracies, maybe China and Russia are colluding to take over Africa, kick the Europeans and the Americans out of it.
Yeah, it's very, very likely.
Because China and
That's been
Africa
going
seem
on
to
for
be
like
in good.
decades already, though. I mean, Chinese and supported coups essentially, and revolutions and everything. Like it's been a thing in Africa for decades and longer. I mean, one of the most interesting ones was like his name starts with a Z. I can't. It was Rain, some weird name, but he talks about like foreign affairs and like political movements. Essentially, he's like, well, China's already been at war with the West for 25 years, essentially, except they do it through culture, money, land, politics. Like they're not in direct conflict, but they've been essentially at war with us for that long.
Yeah, I mean, you look at like mining rights and all this kind of stuff in Africa. Majority of it is controlled by Chinese companies. And that's all because they beat the US to it. So yeah, or they just outbid them.
Or they supported revolutions and coups that resulted in the ousting of the existing U.S. or Western partnerships. And
Yeah,
then in the
yeah.
rubble, then they buy into, oh, well, we'll help you rebuild. You're the new leader.
Yeah, exactly. They just support like extremist regimes, and then we tell them, okay, we'll help you rebuild, but you got to pay us back in X number of years. And when they realize they can't pay that back, and then they're like, oh, okay, we'll just come and take over then.
So I wonder if Africa is better or worse off with China/Russia than with the existing Europe and the States.
I mean, honestly, like the European influence of Africa has been quite long gone. I mean, there's still influence with like partnerships and deals, and the exorbitance of the amount of payments that are paid out every year, as far as like in support and aid payments. But largely, the influence has been gone for a while, like direct influence. Now it's like, well, if you turn the tap off and you stop paying out payments from the Western world to parts of Africa that we rely on for imports, then they'll just say, okay, well, we'll just go to China.
Yeah.
Yeah, I'm not sure if this is true, but the two things I saw about France, the colonialism there, with first of Mali, which is really rich in gold, but they don't hold any own gold, and France has a shitloads of gold. Seems a little bit weird, and Mali has no. They don't have any money. And the second one was with Nigeria, then where they have a ton of uranium, and yeah.
Yeah.
So
I mean, like, you see a lot of these European nations and America as well. What happened when they ran out of things to mine? They went to explore countries that had things to mine, and they just conquered them.
they
Right?
need to liberate people and nations
Yeah.
and
Yeah.
loot them.
Yeah.
So
So that was their motto, right? They're just there for the resources. The same thing the US did in Iraq.
yeah, I think
And that didn't
democracy is
follow.
finally soon about to hit Africa. It's about to come soon, boys.
We can hope so. But I mean, like the Chinese are doing it in a really they're doing the same thing. The Russians and the Chinese, they're doing it exact same thing, but in like a huge different way. Hugely different way. They're not conquering with the military action. They're conquering with financial aid. So yeah. They don't people don't feel oppressed until the action really happens. So yeah.
This is just a thought out of the blue, but I really think like media outlets, let's say TikTok, it's to fucking degenerate the Western civilization and to make men even more weaker. I think that's part of the war plan.
Yeah.
I mean,
Yeah,
it's
definitely. I mean, there are many posts online showing case studies that TikTok algorithms in the US are showing rubbish, while TikTok algorithms in China are basically teaching people maths and rocket science and all that kind of stuff.
No, it's true. I mean, it's 100% proven.
Yeah.
Like, you get actually downgraded for posting degen content in China.
Yeah. Your social credit score gets affected. So yeah.
Funny, they get the science part of it, and in the West we're getting gender fluidity parts.
Yep.
Oh.
Well, it's been a fun one, guys, but it's been an hour and a half, and I got to bounce. So
Yeah.
you guys are welcome to stick around and shoot the shit, but I got to dip out of here.
Yeah, my bad.
You can tell it just like building, like in the beginning, I guess. High time frame to low time frame confluence, and then market outlook discussion. Maybe something like that. I'll let you pick something good.
My bad for taking up a lot of time.
No, please. I mean, I love you're very, very cued in on the happenings in the global markets, and appreciate your candor on the overview of like what's going on in the world. Everyone gets sucked into their own little bullshit. Like, you know, I mean, for fuck's sake, the U.S. government literally just said there's a dude from the government that said we've been retrieving down UFOs for 80 years and we have non-human biologicals, and then
that was all that cover for the for Hunter Biden's trial.
Yeah, I know, but I mean, like, that's the crazy thing is like, that was like a week ago or 2 weeks ago that they were basically saying we have freaking aliens, and now it's like, and then the next thing it's like, up next, Kim Kardashian defends the butt implants or something. Like, it's crazy the amount of pivoting people do. Essentially, it's like or the time that people put in to non-important things. It's like the oversaturation of meaningless information that drowns out important things.
Yeah, but I guess that's kind of like the age we live in, right? There's too much information to digest.
Which means they can do whatever they want.
Like if you think about it, just in terms of crypto, there's so many altcoins. How are we gonna digest every single chart?
Yeah, you're not.
Viking, have you looked into the Ericsson report and that whole story?
No, what's that? I don't even know what that is.
Yeah. I know the Americans are super fucking pissed off because Ericsson, it runs the infrastructure for like 184 countries or something, and all the traffic and data. So they claimed like Ericsson were handing out positions in Iraq or in Afghanistan to whereabouts the American soldiers were located and stuff.
Oh, really?
Yeah, and they have control of the communication. So there's some lot of shit I've heard lately about Ericsson coming up.
No, I haven't heard anything about it. That's pretty crazy.
Especially with what's called like the SOS, the emergency lines.
Yeah.
They have in control of that, and might be far fetched, but something was mentioned about with the pornography, the information. So they seem to be, I don't know, putting pressure on people. Ericsson seemed to be a big part of the whole conspiracy. Yeah. So with the surveillance and everything.
Well, that's creepy. Their stocks poop though.
Yeah, that's what I don't. That's why I think it's weird. But
if it's gonna turn around, it's gonna do it here. Otherwise, it's going down to friggin' like a buck. what do you call it? Structure. So like infrastructure for telecom, I believe.
Yeah, and the whole 5G networks and running those, as far as I understood it. But yeah, no. I don't really get the short to mix up with the previous stories I've heard about it. So, but I don't know.
Well, if it's going to hold, it's going to higher low here. Otherwise, it's wrecked. All right, I really do got to go now. So
Yeah.
you guys have a good one. Thanks. That was a fun conversation. So I'll be back around, and yeah, we got a couple of cool things we're kind of working on in the background. Some high frequency bot stuff, which is really crazy. But we'll see. We'll keep an eye on it, and we'll let you guys know.
Sweet.
Alrighty. Well, have a good one. You guys take it easy.
You too. See you, man.
See you, man.
See ya.
Take care.
You gotta jump, Rex?
I can be around for a bit if you guys want to chat. I like Alex's idea of calling